Good afternoon. This is Chris Robinson, Robinson Ag Marketing, with today's closing grain and livestock comments. Got to lead off with uh, the net changes. D's corn up 8 cents, 405 and a quarter. November beans up 14 cents, 1042 and a half. D's wheat actually got in the game a little bit, 4 cents off its lows. Finished the day up 2.5 cents. The only positive thing I can say there is at least wheat has stopped going down. Um, we'll see if we can extend a little bit of a turnaround here next week. We're in the middle of the month. We'll see what the commitment of trader says later on today. They had been short corn, wheat, and beans, but not massively short. Certainly that we're still digesting the USDA from Tuesday with the 188.8 yield and the extra 2 million acres of corn. And with the loss of 2 million acres of beans, farmers switched over and planted more corn. So all in all, is this a dead cat bounce in D's corn? I don't know. Percentage wise, we did take 6 months and lost 88 cents. And we could do some retracings here, some retracement here. I put it in a letter. I will put it in this the weekly wrap, the retracement levels I look at. But I'd look at like 411, 428. Halfway back of the whole move would be 435. I think a lot of people would love to see 435 corn, especially when we were just worried about 385 corn. So if we get this rally, please use it. November beans, that's probably the positive story there. I think if we can settle above 1050, you're going to get more short covering from the funds. They weren't short a whole lot anyhow. They could easily flip and get long beans, and that may be where they end the year. They may be short corn and wheat and long beans by the end of this month. I wouldn't be surprised to see that shift in the commitment to traders. So all in all, pretty good. I'd say there are some better developments here. Beans have had a nice recovery, and we just see if we can get past it for more than 2 or 3 days. We've seen this a lot in the past year, where we get a rally that has no legs. So I don't want to get overconfident. I certainly don't want to be Pollyannish about it, but it's nice to see a recovery. Moving on to the uh, protein complex, another higher day in cattle. We waited with bated breath for the 11:30 announcement. The head of the USDA, she came out and said, aggressively that they were not going to reopen the border to bring in more cattle. They basically doubled down on that. They also doubled down on new steps to try to stop the screwworm from getting in the U.S. With a new supply of uh, type of flies that they think that will help prevent those that pest from getting up here from South America into America. But certainly that's the issue. At the end of the day, though, fat cattle up today 380, finished the day up 230.650. We did not take out the big resistance there at 232.75. If you look at that chart, and again, take a look at the weekly wrap. I break down all these charts every week. I do all the homework that you want to do. Uh, I'm like the kid in high school that did all the nerdy work. You can look at my notes before class. I'll help you do better on the tests. I will do the homework for you. Look, same thing for Sep feeders. We didn't get a 350 print. We've come close to that 350 level there. Next week the proof should be in the pudding. We did have another 10 cent trading range today for 349 to 339. 339.30. So, a lot of risk there as well as reward. But I think that's the level to continue to watch, and we'll see what happens next week. I was getting more and more bearish towards the lean hogs. It's nice to see a bit of a recovery, especially in like April hogs. Use that 90 cent level out there in April to do some hedging. If you're looking at these for the more nearby market, again, it's still in a downtrend. And I can't really get excited about these hogs until they settle above 86 cents. We settled today at 83, but we did manage a bit of a recovery. There's a wedge in that uh, lean hog D's chart that again I will put in the weekly comments. We'll help you take a look at that. Finishing up with the outside markets, crude oil slipping lower again today. We did not take out 62 cents, but we did finish down at 62 to 62.80. If we take out 62 cents, that's going to open up the door to a run back down to 58, possibly even down to 55, where we were in May. Um, What's driving that? A host of factors. I think some people are still trying to figure out with these unemployment numbers exactly what's going on with our economy and will the Fed cut or not. It seems to be a loggerheads there, and I don't go down that path of whether or not it's political or what's going on there. But a lot of people think there should be a rate cut. Obviously, the person that doesn't believe that is in charge of the Fed. So you can huff and puff and try to blow down the house, but until that gentleman makes a move, we're stuck with the interest rates that we have. And I think you're starting to see that there with the um, kind of the slow grind lower in crude oil. Crude oil is a pretty good indicator of to what's going on worldwide with the economy. We all know that China's economy has been in a slowdown. We've had the issues. Take a look at the copper chart there as well. So that's it for this Friday afternoon. I hope you had a good week. Look for my weekly update. Also, we'll be posting a fresh podcast for members only this weekend. If you need help, if you're interested in learning how to use options, or if you need someone to help you make cash flow recommendations, even if you've never worked with anybody before, give me a call. I can talk about how I can possibly help you do a better job with your marketing, better job with your risk management. This is Chris Robinson, Robinson Act Marketing. Give me a call, 312 638 8868. Have a great and safe weekend.